Okay, roundtable. It is Trading Tuesdays. In yesterday's coaching session, we talked about two currency pairs. First, the British pound as a follow-up from last week's trades. We got a lot of trades off of one very simple trading plan last week. And what I wanted to demonstrate was, number one, it doesn't take a lot of time to generate a trading plan. And number two, a trading plan is simple. And number three, that once you have your trading plan, you are going to know when you have an ideal time to trade and when you don't. Most retail traders that I've met over the last, 5 or 6 years, I see the main issue is dealing with not trading. I mean, let's face it. You tell your friends and your family that you're trading, and they automatically think that in order to be a trader, it means you're always buying and selling. And most people, when they think about a trader, they think that you always make money. Every retail trader that I've ever talked to about like profit and loss statements or being profitable from 1 month to the next, and I mean this as close as I can to 100%, really does think that in order to be a trader, you need to make money week after week, month after month. And yes, the best traders in the world do put up great numbers. They might be profitable every month throughout the year. They might be profitable for every week out of the year. You have to remember that those are traders that every waking moment has been spent trading, and they've often got 10, they've got 15, 20, 30 years of experience. So don't be so hard on yourself. If you're not getting those kinds of results and you've been at this, and I hate to say this, only a couple of years, and I know that hurts when you think about spending 2 years, and I got to tell you, in the beginning when I first started, it pained me to hear somebody say, oh, you've only been at this 2 years. I'm like, what do you mean only? 2 years is 2 years. Anyway, if you've been at it for a couple of years, you've got to cut yourself some slack and realize that if you're comparing yourself to someone like me with over 15 years of experience or someone like my trading mentors with 35 and 40 years of experience, you're comparing yourself to something that you simply haven't achieved yet. So give yourself some time and have some patience. All right, in the pound, when we recapped the trade from the prior week, we talked about our resistance up here, how it was showing up on the hourly as well as the daily bars. And if you remember, we generated lots of trades as the market was working its way down here based on that resistance. Remember, resistance is simply showing us that there are sellers in the marketplace. And I'm pausing for a dramatic effect there. And I'm pausing again for a dramatic effect. When we go wrong as traders, it's a reflection that our opinion is different from everyone else's. And that's not a good thing. Not that we have to be like everyone else. However, we do need to realize that if we sell, right, if we sell up here, we need other people to sell and we need fewer people to buy in order for us to make money. So if you find yourself having a string of losing trades, or it seems like you're getting stopped out often, the first place to look is prior high, prior low. For example, in yesterday's coaching session, the market, I believe, it was trading around 5,600. Okay, so it's somewhere in this area. And my comment was, we're in no man's land. We have support down here, we have resistance up here, and what I'm saying is we have prior buyers down here, and we have prior sellers up here. If I'm going to buy, doesn't it make sense to buy where I'm more likely to have other buyers? Well, if you understand how the market works, then you automatically say yes. You see, it's not the squiggly lines. It's not the computer code. It's not the algorithm that we come up with. It's not any of that crap. It's simply other buyers and sellers. Now, yes, you can have tools that help you to identify when people are buying and selling, but I'm telling you, there's no simpler tool than prior low, prior high. Okay? So, let's not make things complicated. Let's make them simple. All right, that was all recap. If you were in yesterday's session, I talked about orienting yourself to the market and how important that is. I talk about pre-market practice, pre-market ritual. Very, very important. So I marked off a short-term aggressive resistance area. You see the pound, I've got a little bit of a gap here for some reason, but the pound traded up into that area again. Oh, that's right. I forgot my computer was off. Hello. All right. Anyway, so the pound pops up back to 5,600, 5640. This is an aggressive area for selling. Unfortunately, today came late in the session. In fact, well past when our sweet spot time is. So day trades were out. Now, the net effect of having a support zone here and a resistance zone up here and then seeing trading happening in the middle is there's nothing to do. So really, go see a movie, take some time off, read a book, but also recognize that you might be dealing with that angst that says, oh, I have to be trading, I need to be in front of the screen. Well, you know what, you're really wasting your time if you're looking at the British pound. And yeah, you can try and compete in this muck in here, but again, that's aggressive trading. You got to use small stops, and you got to expect to get stopped out more often. We also took a look at the Australian dollar. FXDB Pro showed us that we have resistance up at 800, but then we also had resistance right here where current trading is happening at 57, or excuse me, at 500, 55.7. Don't know why that was so hard for me to get out. Wow. All right, so I talked about some aggressive trades. Number one, I said I want to see at least a double top. Now, what I meant by that is where the market, like here, ran up to resistance once, ran up to resistance twice. We have a confirmed low. We went over confirmed lows yesterday, and then we had our sneak attack. So here was the double top. So this second time up is where I would take an aggressive trade. After the second time up, remember, that's where I start looking for the sneak attack when we're at daily resistance. So we have, here's trip number one, there's trip number two. So either here or on that bar, perfect. Like this time actually that was a little bit late. Let me look at the timing here. Oh, wait a minute. What? All right, hold on. Before I put my foot in my mouth, what is going on with my time? Let's refresh the chart. Yeah, for some reason my data's not showing. Wait a minute. Yeah, it's 1 hour chart. All right, my computer's going to make me pause 10. Yeah, all right, there's a big old gap there. Let me try it this way. Sometimes, just so you know, sometimes if your charts are giving you a problem, you might have to request shift time frame. So like this, I went up to the 4 hour and then back down to the 1 hour. That should fill in all the gaps if the refresh for some reason doesn't. So let's check. All right, 1 Eastern, 12, 11, 10. Yep, okay. Much better. All right, here's the sneak attack. That's trip number one. Now we're coming into today's session. Here's trip number two, right there. So taking a trade up here against that prior high, taking a trade here against that prior high, both of them decent. You could also take a trade against with the market breaking below that low, although I don't like that one. Why? Because it's in between, or it's in the middle ground between another low. All right. Let me pause here. I was gathering my thoughts because I just realized I'm up against 10 minutes here. I try not to make these videos too long because there's already like a massive amount of content to digest. So again, first trip up was the sneak attack. Second trip up, that was right here. Remember, the Australian dollar is an Asian session pair. So you can get trades here, like that was 12 a.m. coming into London. Here's the London session proper, right? This is, yeah, no, it's 12 about. So here's 1 a.m. coming into the London session now. Full on in London session, 3 a.m. Again, you've got trip number 1, trip number 2, here's trip number 3. Either one of these selling against that high or this high would have worked out swimmingly well for the Australian dollar. But again, we're not getting into that trade for just no reason. We've got resistance off of the higher time frame chart. This is the daily chart. There's resistance from the RS line.